Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Ashish Kyal. In the next half an hour, we'll get you all the top buzzers in trade, why they're buzzing on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is shaping up. Ashish, at this point, we have given up all those gains. In fact, from the day's high, we are down almost 100 odd points on the Nifty. We are below the 24,600.
Indeed, and we are feeling the jitters of the additional tariff that was announced yesterday. Nifty, as you mentioned, is now down nearly 180 points below that 24,600 mark. Nifty Bank has also shed nearly 500 points in today's trade. 53,956 is where Nifty Bank is currently trading. We have Shriram Finance, that one is down 3.5%, the biggest loser on the Nifty 50 index. HCL Tech, Infosys, TCS, so the entire IT sector continues to remain in focus and under pressure today. But let's get going with all the stocks that will be in focus today and that are in focus based on news pieces. And on the technical side, we are now joined by Ashish Kyal, founder and CEO at Wave Strategy Advisors. And on the research desk, Rabinder is also joining us. But Ankita, let's get started then.
Absolutely. Let's get started with the first stock that is in focus today, and that is SBI Cards. Now, SBI Cards is in focus on the back of a note that has come out where it is maintaining an underweight rating with a target price of 710 rupees. The note says that SBI Cards, the July spend market share has increased to 16.8% in the month of July from a 16.7% in June. Now, the July spending increased 6.5% month over month for SBI Cards compared to a 5.9% increase for the industry. Now, there could be a benefit from an acceleration in corporate spending, which had declined sharply last year. On the back of this note by Morgan Stanley, SBI Cards is in focus. Currently, it is reeling under selling pressure like rest of the market, trading with cuts of 1.2%.
But one sector which is not feeling the pinch of tariffs is clearly the paints sector. Asian Paints, the stock is up 0.6% in an otherwise weak market. 2497, that's where the stock is trading currently. Ashish, where do you see the stock headed from the current levels?
Hi, afternoon to you and all the viewers. We can clearly see the jitters across the board, and prices have been moving down sharply on index. But Asian Paint has continued to outperform, and I think the entire paint industry has been consolidating for quite some time and should try and give an outperformance from here on with the consumer sentiments picking up. So we can create long positions here on Asian Paint as well, expecting a target of 2,600. And on the downside, the support for the stock is going to be around 2,450 levels.
Okay, so that's Asian Paints for you, but let's also put the spotlight on the entire aviation sector, which continues to remain in focus. Interglobe Aviation on the back of that block deal, but the entire sector is in focus on the back of aviation data that we got for the month of July. Now, India's domestic air passenger traffic recorded a year-on-year decline in the month of July. This was the first contraction that we have seen in the last several months. In fact, passenger numbers fell by nearly 3% in the month gone by, according to the latest data that we got from DGCA. As far as airline-wise performance is concerned, Air India Group's load factor dropped to nearly 78.6% in the month gone by. On the market share front, Indigo strengthened its dominance, where their market share rose to about 65.2% versus 64.5% that the company had reported same time last year. So yes, some deviation as far as the airline traffic is concerned, but Interglobe Aviation, most importantly on the back of that block deal, continues to reel under pressure. The stock is now down 5% as we speak.
All right, so that's the aviation pack in focus. But let's come to the FMCG pack. We picked out GCPL for us. Ashish, tell us, why have you picked out GCPL on the charts? So the last 6 months, it's been an outperformer, 25% return from GCPL. Do you see this momentum to continue?
Yes, I think the overall momentum should continue in this stock as well, and we can clearly see that outperformance can last not only for now but for coming weeks and months together. And as we talked about, the consumer sector should pick up, and Godrej Consumer Products also should pick up from here on. It's forming a triangle pattern which should give a breakout on the upside. We can expect a target in the stock somewhere around in the levels of 1380. And on the downside, one can maintain a stop loss of 1220 levels. The risk reward looks very appealing at the current levels.
Reward is very appealing at the current levels. That's the word coming in on Godrej Consumer. But another stock that's not feeling the pinch of tariff is clearly Shilpa Medicare. In an otherwise weak market, the stock is up nearly 2.5%. Rabinder, tell us, what is the positive news flow here?
Well, as Shilpa Medicare is in focus, where company has announced that the wholly owned subsidiary has entered into a definitive agreement with the pharmaceutical industry and biological products to form a new joint venture company based in the Kingdom of Saudi Arabia to build a new pharma manufacturing facility in the Saudi, and the venture represents a significant step in Saudi's healthcare infrastructure and align with the kingdom's visions of 2030 goals for economic diversification and localization strategic industry. So back of this joint venture, Shilpa Medicare is in focus, and the stock is up approx 2.5%.
Shilpa Medicare, that's up in a way 2.5% in trade. But in under 9 months since commencing commercial operations, Adani's group's Whizzing International Seaport has surpassed expectations to achieve a significant milestone of handling over 1 million 20-foot equivalent units. Now remember that since its launch, the Whizzing has welcomed over 460 vessels, including 26 ultra-large container vessels. Kerala's Minister of Ports V.N. Vaswan said that this is a proud moment for the state and for India as a maritime power. Achieving full scale throughout its record time is the sport. Let's go across and take a look at this package.
Almost after 5 years, once again the Aviation Ministry is pushing to revive the seaplane operations in the country. Aviation Minister Ram Mohan Naidu has publicly announced that by October this year, 2 of the operators, they will be receiving the seaplane and then they will be going ahead to start the commercial operations. And in the same direction, what we are picking up from our sources that Skyhop Aviation Private Limited, which is the seaplane arm of SpiceJet airline, is the front runner and is likely to be the first player who will start the seaplane operations. So Skyhop Aviation has already received the NOC from the Aviation Ministry, and the sources have confirmed that maybe by September end they will be receiving the first such seaplane in the country, and they are looking ahead to start the seaplane operations. SpiceJet has already secured the rights to operate a seaplane at 20 routes across the country, and the probably first route could be in Andhra Pradesh, then going forward it could be Andaman Nicobar Island and even in Kerala. So in first phase, these are the 3 important destinations which can witness the operation of seaplane by the 2 operators, and the first one could be Skyhop Aviation Private Limited. And the interesting part is that this SpiceJet seaplane arm is being spearheaded by Avani Singh, who is the daughter of SpiceJet CMD Ajay Singh. The player who is providing the seaplane is De Havilland, which is a Canadian-based firm, and De Havilland could be the seaplane that can make the entry in the Indian seaplane market. In addition to this, the government or the Aviation Ministry has already announced the revised guidelines for the seaplane last year. The revised guidelines aims to provide the necessary infrastructure support and also the state government support to the probable players. And government understands that the revival of the seaplane could be not just helpful for the logistics sector, but it can also give a further boost to the tourism sector as well.
Samir, thanks so much for joining us with all those details. But on that note, we need to slip into a very short break. But a programming update, a special interaction lined up for you at 2 p.m. today. Jim O'Neill will be joining us to understand what the global macro setup is looking like and what it means for India's equity investors. So stay tuned for that interesting conversation lined up.
You tune into Market Fatafat, where we are taking you through all the stocks that are in news on the back of news flow or on the back of technicals. And ICICI Bank is one name that is in focus on the back of a brokerage note by Jefferies that's maintaining a buy call with a target price of 760 rupees. Now, they feel that the FY25 annual report shows a rise in the risk profile of assets with a higher share of lower rated loans and RWA assets. However, the asset quality has held up and the credit cost remains rather low. The non-performing loans are at their highest in the last 5 years, and the priority sector lending is improving and will limit the drag from the compliance costs. The deposits rose 14% and the micro market strategy is playing off. The attrition fell to 18%, which is lower than its peers. ICICI remains amongst the top picks for the brokerage, and on the back of that, Jefferies is maintaining a buy call. But ICICI Bank is mirroring the market. The banking names are under pressure, so that is also at the lowest point of the day. ICICI Bank trading with cuts of 1% right now.
Okay, so that's ICICI Bank for you, but let's also put the spotlight on the auto sector then, and Bajaj Auto 6700, where the stock is currently trading. Where do you see the stock headed, and do you believe the risk reward is attractive at this juncture for this auto company?
Yes, indeed. If you look at Bajaj Auto, I think the stock has been doing very well. The two-wheeler auto space has outperformed, and Bajaj Auto has started to show some kind of a green shoot now. The stock had a very strong gap up opening on 18th August, and since then it is consolidating right now. I think there can be a very strong positive breakout on Bajaj Auto from here on. We can expect a target on the upside at around 9,700 over near term, and one can also hold it from a long-term perspective. And on the downside, the support for the stock is going to be around 8,400 levels.
Okay, so that's the word coming in on Bajaj Auto, but let's also put the spotlight on a whole host of textile stocks which continue to remain in focus today. The likes of Arvind, Raymond, Vardhaman Textile, in fact that stock is up nearly 11% as we speak, and positive news flow coming in for India's textile industry because the central government has gone ahead and extended exemption of import duty on cotton till the 31st of December. Remember, it was on the 18th of August, a couple of days back, when the government had approved exemption till 30th September, but now it has been extended for 3 more months and the exemption will end on the 31st of December. This comes at a time when the India's textile industry is already facing the brunt of additional 25% tariff which have been ratified by the US government. So at a time like this, Indian government is clearly looking to push and reward India's domestic sector, and textile being one of them. Arvind and Raymond, of course, sitting with cuts of nearly 1 to 2% today on the back of this.
Alright, moving on to the next counter that is in focus. Ashish, you picked out Hindalco for us. Tell us, what do you see on the charts for Hindalco?
See, for Hindalco, we can clearly see that there is some kind of a positive traction in the metal space that we are witnessing. Hindalco also managed to break above that prior peak high of 714, some kind of profit booking at the current levels that we can witness. But I think the stock can again move back towards 730 on the upside. So over short term, one can create long positions in Hindalco, maintain a strict stop loss of around 689 and aim for the target of 730.
So 730, that's the target price coming in for Hindalco. But let's again shift focus to the auto sector then. We did talk about Bajaj Auto, but Escorts, Rabinder, tell us what is the news flow here?
Well, yes, Escort Kubota is in focus, where company has announced the launch of a new tractor Kubota MU4201 under the Kubota brand, and this marks the brand's entry in 41 to 44 HP category market in India, and the tractor is designed for diverse set of agricultural application including haulage. It is highly compatible with multiple implements like rotavator, disc, harrow, etc. Designed by Japanese engineers, the new tractor has all premium features that are offered in existing Kubota tractors, the 45 to 55 HP category range, and this company has also introduced a new Pompa lift in this tractor with high quality Japanese lift technologies capable of lifting 1642 to 2100 kgs with one of the best in the category lift height of 455 mm. So back of this news flow, Escort is in focus.
Alright, Escort Kubota in focus, currently trading with declines of 4% at the lowest point of the day. But the next sector that is in focus is the telecom sector. There's a note by Macquarie on the telecom sector. They feel that a refreshed forecast and reaffirmed a positive view of the sector's fundamentals, even with conservative average revenue per user or ARPUs. Now, Reliance Jio's pivot to value over volume is driving a strong EBITDA growth outlook relative to Bharti Airtel. It added that Tata Communications to the Asia marquee list alongside Reliance, remains positive on Bharti Airtel, and rating and price targets are as below. For Vodafone Idea, they're maintaining an underperform. They've cut the target price though to 5 rupees. For Reliance, they're maintaining an outperform and hiked the target price to 1,650. And for Airtel, they're maintaining an outperform with a target price of 2,050. For Tatacom, they are maintaining an outperform with a target of 2,210. And for Indus Towers, they're maintaining an underperform with a target price of 300 rupees. So that's their view coming in from Macquarie on the entire telecom space.
Okay, so the entire telecom space in focus on the back of this news piece and on the back of this report. But let's talk about the steel sector then. JSW Steel. Ashish, why have you picked up this counter for us today?
See, if you look at JSW Steel and like we also talked about Hindalco, I think there is something which is there in the metal space. But JSW Steel has shown a false break on the upside and has reversed on the downside. The stock, if manages to break below the levels of 1035, there can be a short-term pressure over here, and we can expect the stock to move towards the level of around 1014. So short-term opportunity for JSW still on the sell side for 1014 is the target, and on the upside one can maintain stop loss of 1060 levels.
All right, so that was the last talk of the day. With that, we are completely timed out in this edition of Market Fatafat. Ashish and Ravinder, thank you so much for joining us and taking us through all the buzzers. Ashish and I will take your leave. Thank you so much for joining us.